Ladies and gentlemen, my name is Greg Michalowski from ForexLive.com. Today's trading day is September 5th, 2014. I'm going to talk to you about the dollar versus Canada as we're stuck in between a rock and a hard place. But remember, we're going to have the U.S. employment report tomorrow as well as the Canadian employment report. So there's a chance that we move outside of this range that we're stuck between. All right, before we get started, let me remind everybody that if you like this video and want to see more, please click on the subscribe button. Also, if you're hungry for good quality information about the Forex market on a 24-hour basis, 5 days a week, be sure to come to our website at ForexLive.com. Also, put in your email address and first name, your bank account number, your social security number down here. No, I'm just kidding. All we need is your email and your name. Stuff like that would be sufficient. And we'll keep you in the loop about what's going on at ForexLive.com. You'll want to know. Let's talk about the dollar versus Canada. We'll start off by taking a look at the daily chart. And when I say the market is stuck between a rock and a hard place, I really mean between the 200-day moving average and the 100-day moving average. The blue line right here on the daily chart represents the 100-day simple moving average. The green line represents the 200-day simple moving average, and the current price is trading right smack dab in the middle between the rock and the hard place. And so if we're going to move, where are we going to move? We're going to move to the upside, or we're going to move to the downside, and that might be determined tomorrow morning when the unemployment statistics come out in the U.S. and Canada. Now, in Canada, tomorrow at 8:30, the unemployment rate is expected to come out at 7%. This is unchanged from 7% last month. The net change in employment is supposed to show a 10,000 job increase. This compares to 41.7 thousand announced last month. Now, that 41.7 was good. In fact, it was much better than expectations, but 59.9 thousand of those jobs were part-time employment, minus 18.1 were full-time employment. In other words, part-time employers got jobs, and the full-time guys didn't. So the incomes are not growing at what the Bank of Canada would hope. In fact, Governor Polos lamented to this fact that Jackson Hole, when he said that 75% of the jobs that were created over the last year have been in the part-time sector. That's not good. That's not good to have that type of job growth. You want to see the full-time employment. That creates more income creates more spending, and you hire more part-time and full-time employees at that time. That's what the hope is. So it's not just going to be the number of jobs, the 10,000 number of jobs that are going to be added. It's going to be the mix that's the market's going to be paying attention to tomorrow. We'll be sure to present that to you at 8:30 so that you know what should happen. If the mix is weaker, is weak, that is, if there's more part-time employment than full-time employment, or if that net change in employment is negative or below 10, you can expect that the dollar Canada might go to the upside. That is given the fact that the U.S. employment statistics show is not a huge surprise to the downside as well. And indications are from things like initial claims, things like the ISM service and manufacturing employment components within that index are all showing that the job number should be good. It should be trend-like in the U.S., something around 225,000. We saw ADP come out 204, a little bit weaker than that, but 200, 225,000, 250,000. Any of those numbers can happen, and it's still good in the U.S. as far as job growth. It's trend-like job growth. So the burden is going to be probably on the Canada number to see whether we break to the upside or downside. Is it weaker? Is it stronger? The Canadian side of the equation. We'll see how that goes. So I think there's probably a bias to the upside with the dollar being strong. But if the Canada dollar is or numbers is weaker, we could see a bigger move to the upside. If the Canada numbers are stronger, we could see a neutral or perhaps even a move to the downside. But what we do know is that risk can be defined against the 200-day moving average and the 100-day moving average. If the price moves above the 100-day moving average, that's currently at 108.95. Let's say that if the price moves above the 109 level, we will look for the price to stay above that level and not go back below the 100-day moving average at the let's say it stays above that level and not goes back below those levels right there. We want to see it stay above the 109 level and start to move up toward this high, toward these highs right here, toward this high right here, outlined by these or these lines right here. If it gets above the high for at the 110 level, it says 109.96, but if it gets above 110, then we're off to the races, because not only are we above the 110 level, but we're also back into this channel, which I just left there for convenience sake, but that also would be something bullish to move back into the channel there. So that's the upside. That comes on a stronger U.S. number, comes on a weaker Canadian dollar. Combination of both that forces the price above the 109 level. On the downside, we need to get below the 108.55 level. That represents the 100-day moving average and also the 38.2% retracement of this move to the upside. As long as we get below, if we get below those levels, and we've been below it 1, 2, 3, 4 times here, but maybe we got to close below the 100-day moving average on this day. Maybe we close on it here, but we haven't really had a close below the 100-day moving average going all the way back to this day right here. So all of August, we didn't close, or we had just a small midget close below the 100-day moving average. If we get below the 108.52.55 level, look for the price to momentum to take it down further. And if it stays below that level, that would be something negative. That would be something that you can build on. That would be something that traders will look to take advantage of it. And then ultimately, if we get below the 108.08 level, which is our low price over the last month and a week or so of trading, that would be even more bearish and push the market to the downside. So that's the picture in a nutshell here for the dollar versus Canada over the next 24 hours. Stuck between the rock and the hard place. Ultimately, the rock and the hard place, we break out of it just like you would if you were stuck between a rock and a hard place in real life. You want to get out of that situation. You want to break out of it. You want to move away from that area. And that's what we're going to be looking for tomorrow. And if it doesn't happen tomorrow, we're going to look for it next week in trading next week. My name is Greg Michalowski for ForexLive.com. And let me remind you that if you like this video and want to see more, just hit the subscribe button. And for 24-hour, 5.5-day coverage of the foreign exchange market and global markets around the world, make sure you come to ForexLive.com on a daily basis. Come often, as a matter of fact. Bye-bye. Good fortune with your trading. Bye-bye now.